Welcome back to Quantreef.com. Sol sitting right around 74.07 parked just under a swing high that's been capping it, and that makes this a genuinely interesting spot to sit down and read the chart. Today we'll walk through liquidity, support and resistance, VWAP, Fibonacci, the fair value gaps, positioning, and where this is likely headed over the next several hours. Let's get into it. Price is at 74.07, right below the 1-hour swing high at 74.20, and structure strength here is actually printing low, which tells you this isn't a clean trending market right now. Momentum reads neutral to me. Price has bounced into resistance but hasn't broken it, and the regime is flagged risk off. Neither side has firm control yet. This looks like a compression zone before the next real push. Price is trading above session VWAP at 73.15, which on its own is a mild bullish tell. Buyers have been willing to pay up through the session average. But look at the anchored VWAPs from the recent swing, sitting tight between 72.86 and 73.23. Price has pushed well above both of those bands. That's acceptance above value for now, though with structure this thin, it doesn't take much to drag price back into that zone. The nearest liquidity is stacked just above, at 74.55, tagged as the strongest wall on the board and only about 0.2% away. That's the magnet everyone's watching. Reach odds actually favor a tag there, 67% over the next day. Below, there's a second big pull down at 71.80, roughly 3% away, with much lower odds of getting touched over the same window. Markets tend to run at the nearer, heavier pull first because that's where stops and leveraged shorts cluster, then often snap back once that liquidity's been taken. On the panel right now, resistance above sits at the 1-hour swing high of 74.20, then the stop-loss cluster up at 74.97. Below, support shows up as target 1 at 72.83, target 2 at 70.53, and target 3 down at 69.05. Given how close price is hugging that swing high, I'd lean toward the upside level getting tested first. A clean break through 74.20 and a hold above it would invalidate the more cautious read, while rejection there sends price hunting those lower targets. Above price, there are two daily bearish gaps, one between 78.83 and 80.34, already about half filled, and revisit odds sitting near 77%, so that's a real magnet longer term. The other, way up near 87 to 88.50, is further out and less likely to get revisited soon. Below, there's an unfilled 4-hour bullish gap between 72.81 and 73.23, sitting completely untouched with an 87% revisit rate. That's the one I'd watch first if price pulls back. Working off the 4-hour swing from 70.53 up to 74.31, price is sitting inside the range, close to the 0.382 retracement near 72.87. That level lines up almost exactly with the bullish fair value gap below, which makes it a level worth respecting if price dips. Above, the 1272 extension near 75.34 is the next real target if buyers clear the current resistance cluster. The card prints an N of 80 with an HTS of 60, and that split matters. Readiness is high but the headline trend strength score is more middling, which is why the letter grade lands as neutral. Volume and liquidity score strong at 75, and institutional positioning is solid at 71, both leaning constructive. But statistical volatility is soft at 40, and macro sits right at 50, a coin flip. When positioning looks healthy but volatility and macro don't confirm it, that's exactly the kind of disagreement that keeps the overall read balanced rather than directional. Retail is leaning long here at 70.45%, and interestingly the top accounts are even more long biased at 73.22%, though top trader position size is a touch lower at 63.48% long. The 4-hour taker flow is dead even, 50-50, with about $500 million on each side. With everyone leaning the same way long, a sharp move down toward those lower support pools would be the more likely squeeze trigger, catching the crowded long side offside. The path of least resistance looks like a run at that 74.55 wall first. It's nearest, it's the heaviest pull on the board, and reach odds sit near 67%. If buyers clear it, the 1272 extension near 75.34 becomes the next magnet. If sellers defend it instead, price likely rotates back down into the 72.80 to 73 range where that unfilled bull gap and the 0.382 fib line up. Worth remembering, SOL takes a lot of its direction from Bitcoin. A Bitcoin sweep in either direction can override this exact setup, so it's worth checking Bitcoin's own liquidity map before leaning on this alone. The bullish case wants confirmation on a clean hold above 74.20, with targets at 74.05, 74.37 and up towards 74.55, invalidated back below roughly 71.80. The bearish case fades a sweep of that 74.55 wall, entry near there, stop above at 76.34, with downside targets at 72.83, 70.53 and 69.05. Risk on either side stays defined by those stop levels, not by conviction. So we're sitting right at a decision point. Whichever side actually takes that 74.55 liquidity likely dictates the next real leg. If this kind of layered read is useful to you, give the video a like and subscribe, and know that Quantreef.com runs this same 9-layer structure, probability and liquidity breakdown across more than 100 coins, with a 7-day trial if you want to dig in yourself. And as always, this is for educational purposes only, not financial advice.